It's been a steady quarter for Sagility, with the company growing on all counts. In a conversation with NDTV Profit, Abhishek Kayan, Deputy CFO at Sagility, shares insights on the company's outlook and expansion plans. The stock seeing cuts of nearly 3%. Let's listen then to what conversation Puneet had with the management.
What would you suggest has really worked for you in this quarter? Because a 35% growth on a YY basis, organic growth is almost at 20%. It's been a stellar quarter for you at a time where the Indian IT companies are struggling for growth. You seem to have found a niche within healthcare, and that seems to be working out very well for you. If you can tell us a couple of key highlights for what worked for you in quarter three.
Firstly, Puneet, thank you for having me on your show. Yes, we had a stellar quarter, and the 35% growth also includes inorganic growth. Our organic growth, like you said, is 19%. As you understand, we have seasonality in our business, and especially quarter three and quarter four are months wherein we benefit from open enrollment related work. So this quarter, we had an outstanding open enrollment season for across our clients. Broadpath, which we acquired last year, this year in January, also did very well in this season, in this quarter. And essentially, like we discussed in our quarterly call yesterday, almost 5.5% of our annual top line this year is coming in from seasonal business. And then there are other tailwinds to the business. We've been growing across all service lines that we today have. We've done well on claims, clinical, payment integrity, engagement services. So yes, we've been doing great and hope this continues.
The one other thing, Mr. Kayan, has been that you've yet again raised your guidance in this year in terms of growth. Now, by almost 150 basis points for FY26 has been increased to 22.5% now. Is there anticipation that quarter four has also started with that kind of rigor where you left quarter three, and is the anticipation that margins will also see an uplift because of this?
Quarter three, like I said, we had an outstanding quarter three on the back of an outstanding OE season. Right now we are in January, and we feel quarter four this year would also be good, especially in comparison to quarter four of last year. And the overall guidance we've given for the year at 22.5 factors in the growth that we are seeing in quarter four. This quarter, especially our margins were, we scaled up significantly over last quarter, and despite that, we were able to hold on to our margins. A bulk of the revenues that we get in this quarter, especially seasonal revenues, are more delivered out of India. And as you know, margins outside of India is lower compared to what we get in India. So we did have the scale impact. We did have the benefit from Forex kicking in, but because of more revenues coming in from US this season, our margins were at par with what we made in quarter two. We also expect quarter four margins to be in a similar range, and we've guided for full year margins to be at 25% or more.
The other one thing, Mr. Kayan, and we have been speaking about the company in the past has been about attrition. Now, at around 20 to 23%, it's quite higher compared to the other traditional IT players, but so is your model is very differentiated as well. How do you expect this number to go on, given that we've seen a lot of advent of a reduction in headcount essentially in the industry and very specialized hiring among AI amongst other factors? So where do you see this number for you, maybe in the near term, in the medium term as well, in FY27, any kind of qualitative output that you can provide us?
Sure. One point that I'd like to explain is that our model is very different from typical IT services companies. Unlike them, we handle core operations for our clients. And if you compare us with other companies who are also in the operations space, our attrition number is pretty much at industry standard. Again, this is the attrition number that we report is a weighted average of multiple geographies that we operate in. Our India attrition numbers are really low. And unlike what's happening in IT companies, we are not cutting down headcount. While we are also investing big in AI, we have now deployed almost 30 use cases across 10 large clients. And we are generating a lot of productivity improvements through AI, and we are passing on these benefits to our clients. But we don't really see our attrition percentage to be significantly changing from where it is today. And yes, we'll continue to add headcount as we grow, while we'll also use AI to and bring in more and more tech into the operations that we run. But headcount will also go up as revenues go up, because we need people to run AI, right?
Okay, so that's the management of Sagility talking to us in terms of what's the outlook looking like going ahead. But moving on, let me get in Girish Sodani, co-founder at Ensure Capital, to talk to us about his views as well. Girish, welcome to the show and always a pleasure to speak to you on NDTV Profit. This is Hiral on this side. You heard the management of Sagility as well with the kind of numbers that they've posted in the third quarter, the expectation that they have going ahead as well. What would you advise investors to do and what's your view on the counter?
So, as per the propositions of the results, we are just expecting that the looking out for the next 2 to 3 quarters itself. So, just hold the position as of now and looking out. At least because the Gritty India's growth numbers should be there in the next 2 3 quarters itself. The order book should be there. So just hold your positions.
All right, so that's the view coming in regards to where Sagility India stands.